This is Matthew Cratter from Bitcoin University, and today I wanted to answer the question, is Bitcoin dominance falling? In yesterday's video, we talked about the importance of valuing your wealth in Bitcoin, and we also talked about how capital will continue to flow from the weakest forms of money, fiat like the US dollar, altcoins, crypto, into the apex predator of money, which is Bitcoin, which is such a unique asset. And I thought that Swift Shift 06 here had a good question, a good follow-up question. If capital continues to flow from weaker to stronger, why has Bitcoin dominance trending down over the years? Now, Bitcoin dominance is just a ratio expressed as a percentage. It's Bitcoin's market cap divided by the total crypto market cap, then expressed as a percentage. And it has been trending down over the years. We can see that really early on. In 2009, for example, Bitcoin dominance was 100% because there weren't any other cryptocurrencies, and it has been falling over time as people have printed up their own tokens and their own currency. So this is something we would expect to happen if we were measuring, for example, internet dominance. And very early on in the internet, maybe there was just one company, there was the US government or whatever, and then as you get more companies, you have the dominance of that initial player fall. We can see that Bitcoin dominance right now is hovering at about 50%. And if you go to CoinMarketCap, this doesn't have the best metrics. Some people find fault with them, but they're a good first order approximation. We can see up here, we can see Bitcoin dominance at 48.6%, ETH dominance at 19%, total crypto market cap at 1.2 trillion. And then we can take a look at the top 10 coins by market cap, and these really account for approximately 90% of the total value of crypto. This is how fat tails tend to work in finance, where you have just a few assets that take most of the value. So the top 10 coins account, as we said, for about 90% of total crypto market cap. Bitcoin accounts for approximately 49–50% of total crypto market cap. That'd be a measurement of Bitcoin dominance. And then the next largest coin, as we said, Ethereum, accounts for only 19% of the total crypto market cap, which is very sad for the Ethereum community because they were convinced that Ethereum was going to flip in Bitcoin after the merge, and instead it actually began to lose market share to Bitcoin after that. So I think it's always important when you have an index and you want to measure dominance within that index to take a look at what is in the index. And as we said, 90% of the value is in the top 10 market cap coins, which no longer include trash like Bcash or BSV or some of these other things. But let's go through and talk about number 2 through number 10. Bitcoin obviously is still number 1 in terms of market cap. So number 2 in terms of market cap is Ethereum, which is of course a scammy coin. I've covered this, I made so many videos about it on this channel going into depth. Scammy coin with 70% pre-mine that consolidated insider control by moving to proof of stake and giving up the proof of work race with Bitcoin because it could not compete. And it also wanted to consolidate insider pre-mine beneficiary control, as we said, largely controlled by Vitalik Buterin as the lead dev and by Joe Lubin, who owns this company Consensus, privately traded company, which controls most wallets through MetaMask and runs most Ethereum nodes through companies like subsidiaries like Infura. So that's number 2. Number 3, USDT. This is the US dollar stablecoin issued by Tether. This is a tokenized version of a melting ice cube of fiat money, US dollars, with huge counterparty risk. The question is, does Tether have enough US dollars to back it? Probably does, but we have no way of knowing. And we also have no way of knowing whether they will still have enough US dollars to back it if the US government goes after one of their banking partners and confiscates or turns off the treasuries that they're holding, for example. So that's number 3 on the list. XRP, number 4 on the list, 100% pre-mined, centrally controlled corporate coin where Ripple nodes and Ripple devs have all the power. You can cite recent legal rulings, which will probably be appealed and overturned, but these legal rulings do not change the fundamentals of this currency, a highly centralized pre-mined currency. And the parent company Ripple, of course, pays influencers to pump coins and to run ads. A very different sort of ecosystem from the Bitcoin ecosystem. So that's number 4. Number 5, BNB. This is the token for the Binance exchange, which is in the process of basically being kicked out of the US and possibly persecuted globally as well. BNB is that centrally controlled exchange token that goes to zero if Binance fails, in the same way that FTT essentially went to zero when FTX failed. So this is a really risky thing to hold, and it doesn't really serve a good purpose. USDC, another US dollar stablecoin, tokenized version of a melting ice cube fiat money with large counterparty risk and also regulatory risk because it's the onshore version of US dollar stablecoins and the most popular one. Next one down the list is Cardano. We talked about this many times. A scammy coin with large premined, controlled by a guy who wants to roll out social credit scores for African children and says that Bitcoin should be shut down. We'll talk a little bit more about him in a moment. Solana's next on the list, premined VC coin using proof of stake. Then next is Dogecoin, literally a meme coin or a joke coin with proof of work. That's just a tiny fractions of Bitcoin's hash power and proof of work. Finally, number 10 on the list, Polygon Matic, a pre-mined VC coin using proof of stake. If you're finding this video helpful, I just ask you to hit that subscribe button, hit the like button, and leave a comment as well. We can see here how Polygon Matic was backed by VC investors. And we can also see here the large pre-mines and pre-sales associated with many of these coins, including BNB, Ethereum, Cardano, Solana, etc. You can't have neutral money when you have a large pre-mine. It skews the incentives and destroys the neutrality of the money going forward. I'll link as well to this video I made about Cardano and social credit scores for kids, as well as this article by Calcasa talking about how he believes, and I'm not saying this is true, I just found this on the internet, how he believes that Charles Hoskinson, founder of Cardano, is scamming Ethiopia. I'll also link to this in which I talk about how Charles Hoskinson is saying that we need to turn off Bitcoin, as well as this link from a book called Out of the Ether, in which the author talks about Charles Hoskinson and describes him, or says he was described to the author by the people he worked with at the time as a pathological liar, a sociopath, and as someone not to trust in the company of your girlfriend. Now, these are just internet allegations. I'm sure Charles Hoskinson is a wonderful person in real life. But if you own this coin, you should know about some of this background. And again, do your own research. I'm not saying that any of this is true. I think another way of thinking about Bitcoin dominance is to think about precious metal dominance or just metal dominance. You have all these common metals in the Earth's crust. I think aluminum is the most common. And forgive my American pronunciation, aluminum or aluminium. And then you have the precious metals, gold and silver. You have some other very important metals like iron and copper. And you can imagine a situation where someone just brings a giant pure iron asteroid to Earth from outer space. All of a sudden, gold's dominance is now falling because there's a lot more iron on Earth. And you can ask yourself, if this were to happen, did your gold coins become worth less? No, of course not, because gold is fundamentally quite different from iron and much more scarce, in the same way that Bitcoin is fundamentally quite different from gold and much more scarce and useful in terms of being able to zap it around the world, etc. Likewise, Bitcoin, if you create another $100 billion worth of USD stablecoins, US dollar melting ice cube tokens, this doesn't change Bitcoin's fundamental value prop any more than bringing an iron asteroid to the Earth would change the fundamental value proposition of physical gold. Though it does, when you create these stablecoins, it does decrease Bitcoin's dominance in that index. This is one of the problems with the Bitcoin dominance index. It throws everything into this index and doesn't really distinguish between how different the different coins are. The other thing about the Bitcoin dominance index is that there's only one constant to it, which is that Bitcoin is here year in and year out. If we go back and look at January of 2014, we can see that the top 10 list looks entirely different. Of course, we have Bitcoin at the top. Bitcoin is the apex predator of money, is always at the top. We have Litecoin, which has fallen out of the top 10 recently. We have XRP, and then everything else below that. It looks like we have Dogecoin as well, but we have all these coins that most of us have never heard of, like NXT and Quark and BitShares, PTS, who knows what these things are. But this list is always changing in terms of what are in the top 10 coins. The only thing that's constant is Bitcoin. And so a strategy of buying a basket of crypto is almost like a strategy of buying a basket of different types of manure, chicken manure and cow manure and horse manure. It's not a very good diversification strategy because you're buying manure. And so if you buy the top 10 elements of this basket, you're really the other elements, there's a very good chance they'll go to zero and disappear, like NXT and Purecoin, etc. And only Bitcoin will remain. So this is a little bit different. It's very different if you buy the S&P 500 index, where you also have some very important companies like the tech companies that make up a large percentage of the market cap. But S&P 500 companies are, on the whole, a very good basket of high quality companies. By contrast, in crypto, when you have a basket, a market cap weighted basket, there's a lot of complete garbage in there, and there's a lot of turnover in that garbage. That's a very important thing to remember. And so if you're trying to track this index, you're going to be buying and selling a lot of garbage to stay pegged to the index. So Bitcoin dominance really is a misleading metric, because this list of top coins is always changing, and also because Bitcoin dominance combines these categories that don't belong together. US dollar stablecoins like USDT and USDC, they're included in the Bitcoin dominance calculation, as we said, but they're just different instantiations of the US dollar, which is a centralized token that's engineered to lose 10 to 20% every year in purchasing power. And so it's very strange to put these in the same category as something like Bitcoin, which is scarce and not controlled by any insiders or corporation or government like all the other coins on this list. In addition, most of the top 10 market cap coins have large pre-mines or pre-sales and a high degree of centralization. Now, decentralization might not matter to investors today or tomorrow, but it will be critical moving forward as nation-state attacks on crypto and Bitcoin escalate. And only Bitcoin is neutral money and anti-fragile money that will be able to withstand these various forms of soft and hard nation-state attacks. And only Bitcoin as such will continue to take global market share. And not just global market share of crypto, but also global market share of assets. So for example, if we take a look at, if we want to think about capital moving from weaker forms of money to stronger forms of money, or weaker stores of value to stronger stores of value, we can take a look at the chart of gold versus Bitcoin. If the chart is going down, that means that gold is losing. And if we scroll out, we can just see how badly gold has been losing over the past decade. Likewise, stocks, the same pattern. As this chart goes down, it shows Bitcoin appreciating at the expense of a basket of tech stocks, which have been probably the second best investment you could have made in the world besides Bitcoin over the past decade. And then as well, we have the median sales price of US houses normalized for Bitcoin. And we can see over the past 5 years what it looks like. And then over the past 10 years, again, Bitcoin taking market share. So if you wanted to do a real Bitcoin dominance index, you'd want to include traditional asset classes, not just pre-mined, centralized, proof of stake junk like CoinMarketCap has in their index, but you'd want to include things like gold and real estate and stocks that Bitcoin continues to appreciate against and take market share from. This would be the true Bitcoin dominance index. If you enjoyed this video, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.